To Cape Town now. This is where we find business anchor Rofhiwa Madzena. She's in Parliament ahead of that speech by Finance Minister Enoch Godongwana. Rofhiwa, earlier this year in February, in fact, the minister had said that there'd be some fiscal consolidation, but we all know that government spending has exceeded basically that 200 billion rand mark. So that hope for fiscal consolidation disappears, doesn't it?
It really does, Masako. Very good afternoon to you from a very sunny Cape Town today. But yes, fiscal consolidation spoken about by the Finance Minister in February's budget, and a lot of banter about austerity measures being taken into place. But this is difficult, Masako, because government recently gave in to the wage increases for government employees at around 7%, and that beyond what it was trying to do when it comes to curbing that wage bill. But like you say, government spending a lot more than it's making, and of course the president, you'll remember, on Monday told us that the debt servicing cost of South Africa's debt, for example, is more than the police budget. So a lot that the minister is grappling with here on a very tight budget. So we've got Riza Ishmael from Precinct Investment talking to us about these issues. Thank you very much for your time this afternoon. Actually, talk to us through the government's inability, or rather to have this fiscal restraint and what that does to public finances, as we've seen of late.
Sure, thanks very much. Yeah, so the key issue would be basically if we can sort of think of the budget in broad terms like an ordinary household budget. We know revenues are very likely to disappoint, and so the real work or the real action that we're hoping to see is on the expenditure side. So we know that at the time of the February budget, hardly a month after that, you had a massive sort of public sector wage sort of agreement that will cover the next two fiscal windows. So it's quite important to see now how expenditure will therefore be reprioritized, given this public sector wage deal, which was not in its entirety factored in at the time of the February budget, right? So we'll see, and the hope is that expenditure is not removed from sort of key service delivery areas such as public infrastructure spending and service delivery spend in the municipalities. So the hope is that sort of expenditure is not removed from those critical areas.
And that's been the major concern from a lot of the conversations that we've had throughout the morning, that expenditure will be moved from the municipalities to fund other initiatives, and that speaks to a funding strategy that government needs to have. And what kind of the risks are we looking at based on the well thought out strategy or not well thought out strategy here?
So from around 2017, the National Treasury has sort of articulated sort of their strategy to rely less on sort of funding via the nominal bond market, where we know sort of the cost of funding is approaching around 13%. So at the back end of the yield curve, yields are around 13. So the idea would be that the funding strategy, or the key lever of the funding strategy, is not in fact increasing the size of the weekly sort of bond auctions, i.e. not making use of nominal bonds at the back end of the curve as the primary funding mechanism. The intention is that the government explores a number of other levers that will not be so punitive on the fiscus with regards to interest servicing costs ballooning ever upwards.
And what kind of message do you think we should get about the parastatals and the direction that National Treasury should take when it comes to these? We do know that for the first time ever, Transnet has come to say we need some money, and this is not good because it's still dealing with Eskom as an example.
Yeah, I think so. For the first time in a long number of fiscal windows, I think Eskom for once is not the key focus of attention. But in this case, almost its sister Transnet, which is the sort of the ports, rail and freight sort of utility, and we know that the kind of assistance that they have asked from government is in the order of about 100 billion. And so that's a sort of an eye-watering number. But in the same manner as what we saw with Eskom, it's very likely that the kind of support that they do get, comes with a number of sort of provisos that they will need to comply with regards to the nature of how they can deploy funds and the exact nature of the assistance that they will get from government. So that remains to be seen, but I don't think this is an issue that we've seen the back of, i.e. the sort of government to support to sort of flailing SOEs. I think that will still remain quite topical.
Riza, thank you very much for your time. That is Riza Ishmael, who is the head of bonds at Precinct Investments, speaking to us about a funding strategy strategy that government should have in place, Masego, to make sure that it is able to deal with the fiscal constraints that are growing in South Africa. And a huge part of that is to make sure that the social services that government has provided for decades to communities that need it the most remain, and that monies are not redirected to SOEs, which you've seen over the years have just guzzled the finances. But another important conversation we were having a little bit earlier with Waldo Marcus from TPN Credit Bureau is around the constraints that normal households face. And I think one of the important topics that we touched on, which I'm hoping we can ventilate a little bit further, Waldo, is this issue of the land expropriation without compensation. And you mentioned something earlier that was quite interesting, that it doesn't just affect a certain group of people in the country, but it trickles down to the grassroots levels, to basic households, small businesses in the country as well.
So when we look at our TPN data set, we look at people paying R100 or more rental all the way to above 25,000. What we've seen in the past couple of quarters, especially since COVID, those that pay less than 3,000 Rand a month rental, so those that is on a lower income stream a month, they're really struggling to make sure they make ends meet. Then you're looking at, as we progressively go up, we start seeing that those in good standing, our tenants, improve. But very interesting, those at the very, very high end, those paying 25 or more thousand Rand a month, and I have to say that's just 1.2% of the residential rental market. But what we see that those two are really struggling to catch up to what the national average is. But coming back to those that pay less than 3,000, they really make up 18% of the formal rental market, which is substantial. And land expropriation, as we need more investments. As we know, government is struggling with its finances. So finances cannot necessarily be redirected to providing that finance and providing the capital that's needed for us to solve the housing crisis. So therefore, we have to look at other financial institutions, international markets to say, invest in us. And until we've really resolved and take a stance on these things, it's going to be a big challenge for us to go to, the banks, commercial banks in South Africa, and even international banks, to really bring those investments in, if we're still not very clear on what is happening going forward.
Yeah, I suppose a key component of this, Waldo, is data also showing that even the luxury property rental market is a little bit uneasy because of the times. People can still afford in some instances, but there are some difficulties there, and that says a lot when the luxury property space is also being impacted.
Yeah, I think that there's been a migration from people that would have purchased property, and with the high interest rates and low consumer confidence, we still seeing that it's at a minus 16%, although previous quarter was minus 20%. That confidence that your higher end market is required to say, listen, I want to invest in property, which, as again, it's a long-term investment that's required. We're seeing that they are still a bit jittery. We're not seeing a lot of deeds data, moving transactions taking place, but also not taking up necessary rental property. So they're rather scaled down. We expect that some of that money that they would have spent on rental is going towards savings as things are unsure, and also trying to catch up with what happened during COVID. There's a lot of people that lost a lot of revenue, business owners especially. And on top of that, we have, load shedding, and that load shedding is a really big drain on the operating costs of businesses. To give you an idea, during peak load shedding, they can pay up to 50,000 Rand a month towards diesel cost if you run a sizable restaurant. So that needs to come somewhere, and you can't just push up your prices. So even businesses are really feeling it, and the higher part of the commercial property market, so those that pay 55,000 or more for their commercial property, we've seen that they have maintained a very good position in terms of paying month to month, and the reason for that is that they have the ability and the capital to have backup power. They could make alternative arrangements. Those paying 10,000 or less a month, and these are the smaller retail stores, these are the salons on the street corner in a formal building, they are also struggling to make ends meet. Why? They don't have the resources to necessarily get a generator, so when there's load shedding, they shut their doors. And that means just less time to make more revenue, which is so desperately needed in creating the jobs that we so desperately need in this economy.
Yeah. And another final component, if you will, Walter, the service delivery in different municipalities has also caused businesses, commercial or households to move to certain areas where those services can be provided for them. Has TP and Credit Bureau seen movements to say we're going to leave, the Eastern Cape to come to this area because we get water, because we've got electricity and the like?
Oh, most definitely. I think when we look at from a provincial level, it's clear that businesses are downscaling in certain provinces, and are they relocating to other provinces or separating their offices. Service delivery is critical for business to flourish, for attracting new developments as well. Industrial developments, which is on the up, we see that that's the sector of the market really has very low vacancies, very good tenants in terms of payment, as well as good escalations. And they are going where there's good infrastructure. And good infrastructure means roads, water, utilities, but also road infrastructure to distribute from. And it would be very interesting to see what the minister is doing in terms of Transnet. Yeah. That is going to be a big consideration for a lot of large companies that needs to move goods around where they built their warehouses. If you can't get it inland, they will most probably move closer towards ports like Cape Town and Durban, and rather start distributing themselves from there.
Yeah, very interesting insights. Thank you very much for joining us today. Very interesting conversation there, Masako, saying that the minister needs to focus on strategic assets like Transnet, because this is where businesses are attracted to, where they can move whatever merchandise that there is that they are producing. The miners, you would have seen in various financial statements over the last few months, indicating that they've lost billions in export revenue or sales because they were not able to get whatever commodity that they mined to the ports because of the rail network or the lack thereof, and that having an impact on tax revenue. We do know or are expecting that SARS will announce a lower tax revenue collection for the financial year, which makes it just that more difficult for the minister to maneuver an already tight budget.